Hey, everybody. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. And we're going to deep dive into the major drop on gold and silver. Silver now down over 10% from its recent highs of just a couple days ago. I talked about this. I gave you the level, the parallel on silver, saying it was going to be a sell off. And we are seeing it today. In addition, we talked about the similarities between 1979 and 2025 on the gold chart, literally 9 weeks up in a row on gold in 1979 before a big correction. And we saw 9 weeks up in a row on gold now, and now we're seeing the correction begin. Let's discuss these charts and analyze the trade levels because this will give us buying opportunities. All right, into the charts we go. There's your gold drop down 5%. You do not see gold very often down 5%. That's even with a short-term bounce off of the lows. Take a look here, folks. Massive sell-off to the downside. Notice it's engulfing right here. 1, 2, 3, 4, 5 days basically in a row. Now, listen, overall, I'm a huge long-term gold fan and bull. I want to be clear on that. But charts, they don't go straight up. And you have to know that as a trader and an investor. You've got to be knowing where the corrections are most likely going to take place. Let's dive right into the gold chart, comparing it to the 1979 action. So what we see is almost a perfect replication of the 1979 period. Here's your 1979 rally up, sideways, and then right here, we get 9 straight up candles in a row, followed by a big correction, right? Here, same thing, up move, sideways consolidation, and 9 up candles in a row. And this is the weekly time frame. So this is 9 weeks in a row up, 9 weeks in a row up in the 79 action. And then here was what the next candle followed. Look at what's beginning to happen here. Now, listen, do I think it's going to be this big of a correction? No, not in 1 week, not even close. This was a much bigger percentage move because it was coming from a lower point. But do I think ultimately gold could correct down to about 35 to 3,600 when all is said and done? The answer is yes. So let's discuss why this is different, right? So we've just talked about why this is very similar to 1979, almost perfectly identical on the charts. But why is it different? Why do I believe this is not going to be like the top being put in 1979? And why, let's be clear. In 1979, the top was put in and we corrected 71%. Gold dropped 71% from the 1979 highs. In addition, we didn't make new all-time highs till recently, right? I mean, it was just that simple. Well, not recently, but it took years and decades really for gold to make new all-time highs. Now, the kicker is this, guys, okay? The difference maker is very simple. In 1979, Paul Volcker was raising interest rates aggressively going into the 80s, right? Interest rates were up to 15, 16, 17% for the Fed funds rate, right? So again, right now, if you compare that to what's going on now, interest rates are falling, right? The Fed is just about to cut rates next week by another 25 basis points. Interest rates are nowhere near the 10, 15, almost 20% that we saw back in the early 80s. Okay, so that's very important. In addition, the debt to GDP in 1979 to 1980, you know what it was? 32%. Today, 130%. So the underlying is way different, which is important to understand. Because to me, the difference maker is that, yes, I think we're going to pull back just like we're seeing, like I called for, but ultimately it's going to lead to a buying opportunity where within a year or so, we make new all-time highs, maybe even in less. Versus in the 70s going into the 80s, it literally took decades for gold to make a new all-time high. Don't see that happening. And again, I just laid out the case of why this time is different in terms of, and by the way, I didn't even mention de-dollarization going on. But again, other countries are massively buying gold, China, etc. The rest of them massively buying. Federal Reserve banks are buying gold. There's this concerted effort to de-dollarize, to move away from the US dollars being so reliant on it. And gold is one way to do that. And that's only going to continue. All right. The fact that the US has so much debt, that the monetary policy is so weak, essentially, or easy money, it's going to push more de-dollarization. So gold, again, likely, yes, pulls back here. We're seeing it today, but we should see further upside in the not too distant future. All right, back to the charts we go. Let's jump into silver. Look at the drop on silver, guys. Now let's get rid of this trend line. This is a potential downside target of mine, but let's go back to my call just a couple days ago. I did a video saying we could correct on silver 15 to 20%. Well, guess what? Literally 2 days later, we're already down 10% off of the highs. Amazing. Amazing how the charts are so good. And by the way, the charts aren't perfect. They are not. Please don't understand. I am wrong absolutely on occasion, right? It's a probability game. So my goal is to make sure that 75% of my calls, like if I learn and study the charts hard enough, I shouldn't be right on 75% of my calls. Still leaves 25% that I'm not going to be right on. Just the nature of the beast. There's always going to be unforeseen things that occur in the charts. Now, going to this is what I laid out for you just a few days ago. Amazing parallel going back to the October '08. So the financial crisis lows here. Here's your low in COVID to your high. Look at where we topped out. Look at that correction already. Amazing. All right. By the way, we're seeing here on silver down 7%. It was down almost 9% at its lows just today. That's not even including this drop here. And if we do a measurement from peak to trough, what do we see? 12%. We were down a total of 12%. Remember, just 2 days ago, I said we were going to correct 15 to 20%. We came within 3 percentage points of my low end of the target. Now, in a worst case scenario, how low could silver go? Where will I be loading the boat? We take a classic trend line. We just use our classic trend line and we say, okay, this upsloping trend line connecting the low of April to these lows. There you go, right around 40, just below $43 per ounce. Now, listen, we already got to 48. So again, we just went from 50, almost 55 down to 48. What's another hop, skip, and a jump to 43 or so? In addition, what we want to do is we want to take our Fibonacci tool, right? We do our fib, and what we can see is this area right here is going to be a 382. So this will continue to inch up anywhere between the 382 and the 0.5 retrace. To me, that's going to be my spot. Now, again, will I go all in there? The answer is no, because I don't do that. I don't trade that way. I don't believe that I'm never going to be wrong because it's a probability game. So if silver comes back to that level, I'm going to be nibbling on it and buying some, but I will leave myself maneuverability to buy even lower on the silver chart if it wants to go lower. Remember, charts will do what they want. They could break this level that I just showed you. If they do, they could go down another 3, 5, 10%. How do you maneuver? If your bull case stays strong, which is the de-dollarization, the debt to GDP, the Fed lowering rates of precious metals, you have to be ready to say, okay, well, in this case, how do I maneuver should it come lower as long as my bull long-term thesis remains intact? Now, people that have been buying, and by the way, one of the things that recently made me, and I saw someone even commented on one of the YouTube videos saying in Australia, you literally, all the places where you could buy gold and silver are sold out. To me, that's a bear signal. It means retail is fully basically drinking the Kool-Aid in the near term, like it'll never go down. And those are the weak hands that have to be flushed out. And ultimately, that's what we're seeing. And by the way, GDX, we can look at GDX here real quick. Let's go to that chart on GDX. Bear with me here. We'll bring it up here. GDX, beautiful down move. This perfect, look at this. From the COVID low right here through these highs, this beautiful parallel, it knocked it out of the park. Look at the high right there on GDX. Look at the correction on GDX. Wow, what a drop on GDX today. I think GDX, honestly, you could go back to this area here, back to like 59 to 60 bucks. I might start nibbling right here around 68 and then just dollar cost average down. But this longer term lower parallel should work really, really well as a longer term support. But look at that drop down 10% on GDX, folks. And again, it was due. It was due. If you look at Newmont Mining, look at Newmont Mining, guys. This longer term trend line is now breaking. Granted, it's not confirmed. But again, Newmont Mining, I would say this is likely going to retrace. So interestingly enough, look at where it's currently sitting for this former high from 2022. But in reality, you're probably talking about a Fibonacci retrace. If we take our low here from the beginning of the bull move, all right, so here's your 236, which is nothing. I mean, that's only a minor correction. I'd be probably looking at the 75 all the way down to 68 level. Right in here would be where I would start to nibble. And obviously, it probably coexists with the GDX level as well. But listen, folks, if you're new to these videos, you guys can see. Remember, it's no BS, just charts. Like, listen, don't think that my emotions don't sometimes be like, oh, Gareth, stay bullish on gold. It's like I've been able to shut them down. And when I shut them down, I look at the charts. And while the charts are not perfect, it's really about the probabilities. And that's what enabled me when everyone else is telling me. I mean, look at the comments on the YouTube videos. You know if you're one of them, where it's like, oh, he's crazy, silver, this. How many times did we hear, this time is different, right? And which I kind of agree with. But in the short term, greed and fear isn't different. Greed 100 years ago was greed. Fear 100 years ago was fear. It doesn't change. And that's the beauty of the charts of why they work so well. Granted, not perfect, but why they work such a high percentage of the time is because all you're doing when you're trading these prices, you're trading human emotion, greed and fear. And greed, again, 1,000 years ago was the same. People were greedy back then with gold. Gold was a thing, by the way, thousands of years ago. And people were greedy back then, just like they are now. And listen, again, when you look at the fundamental aspect, yes, the bull case is still there for silver, gold, platinum, palladium, you name it. It's still intact. And that's why longer term I am bullish. But again, the correction, it was written in the charts. And if you paid attention, there's a lot of money to be made. You guys have a great one. Thanks so much for tuning in, guys. Thanks for sharing this video with anyone you think. That's all I ask from you guys. Share these videos with your friends and family if you think they could benefit. Have a great rest of your day. Take care.